Hello everyone, welcome back to Fundrise Finance. This past week has been so volatile, with the markets being so choppy and just not knowing where to go. Every day we seem to have moments where the market will rally up just to be followed by a rally down. The week started off being brutal on Monday. The markets were more than 3% down, followed by a flat Tuesday, and on Wednesday, when the new inflation numbers were released, with inflation for the month of April was at 8.3%. The market just lost their footing and was down more than 1.5%. That followed by another choppy Thursday, when the markets were pretty much flat. And just when everyone thought that S&P 500 will dip into the bear market territory of being more than 20% down, just on last Friday, we saw the market zoom up almost 2.5%. Overall, the S&P 500 is down more than 16% year to date. The Nasdaq much worse, more than 25% year to date. Even Dow Jones, which is made up of all those stable companies, is down 12% year to date. There are two ways to look at it. One being sad that the markets have just eroded our investments, but the other side is that many of the good companies are now at a bargain prices, and we don't want to let go of those opportunities. In today's video, I want to discuss 5 such companies which I feel are a very good buy considering we are at middle of the month. Let's check it out. Before going further, let's look at how our mid-April stock list looks like. Here we had Morgan Stanley, Starbucks, T. Rowe Price, JP Morgan, and Cummins as our 5 picks for mid-April. When we ordered them by performance in the last 1 month, we see Cummins doing the best of these at around 3.5%. The rest all of them have been down. Morgan Stanley is down more than 4%. JP Morgan is more than 6% down. Starbucks, again 6.5% down for the last month. T. Rowe Price being the worst, down more than 15% down in the just last 1 month. Since most of these have just gone down more in the last 1 month, I have many of these even in my list of mid-May stocks. They have just become more cheaper and are at a better bargain than what they were in the month of April. So let's go over these stocks again and see what valuations they stand at. First on our list we have JP Morgan Chase, ticker symbol JPM. JP Morgan Chase is from the financial sector with a market cap of almost $347 billion. It currently yields 3.36%. Year to date, JP Morgan has fallen almost 26.5%. In the last 1 year, more than 27%. From a dividend standpoint, JP Morgan Chase has been growing its dividends for the last 9 years at a 5-year growth rate of 14.99%, with a very good payout ratio of just 29.35%. Tracker Dividends gives JP Morgan Chase a dividend score of 80 and considers it undervalued by more than 28%. But as per my dividend theory calculations, which considers the current yields and the past growth, I calculated JP Morgan to be undervalued by 21% with a fair price of $144. Next, we have Air Products and Chemicals, ticker symbol APD. Air Products and Chemicals is from the materials sector with a market cap of $51.32 billion with a yield of 2.77% and a PE of 22.72. Year to date, Air Products and Chemicals has fallen almost 21%. In the last 1 year, it has fallen 22.5%. From a dividend standpoint, Air Products and Chemicals has been raising its dividend for the last 39 years at a 5-year growth rate of more than 12%, with a slightly higher payout ratio of almost 63%. Tracker Dividends gives Air Products and Chemicals a dividend score of 81 and considers it undervalued by more than 29%. But as per my calculations, I found Air Products and Chemicals to be undervalued by 22% with a fair price of $285. The third stock on our list is UGI Corp, ticker symbol UGI, which is from the utilities sector with a market cap of $7.95 billion and a yield of 3.7%. Year to date, UGI has fallen almost 15%. Last 1 year, more than 11%. From a dividend standpoint, UGI has been raising its dividends for the last 18 years at a 5-year growth rate of almost 8% with a payout ratio of just over 52%. Tracker Dividends gives UGI a dividend score of 95 and considers it undervalued by almost 48%. But as per my calculations, I found UGI to be undervalued by 23% with a fair price of $48. The fourth stock on our list is T. Rowe Price, ticker symbol TROW. This is from the financial sector. T. Rowe Price has a market cap of $27.1 billion, the yield of 3.94%. Year to date, T. Rowe Price has taken a real beating. It is down more than 37%. Last 1 year, more than 36% down. From a dividend standpoint, T Rowe Price has been raising its dividends the last 36 years at a 5-year growth rate of more than 15%, with a payout of just below 36%. The T Rowe Price, along with Air Products and Chemicals, are the two dividend aristocrats in our list today. Tracker Dividends gives T Rowe Price a dividend score of 68 and considers it undervalued by more than 45%. But as for my calculations, I found T Rowe Price to be undervalued by 28% with a fair price of $156. The fifth and final stock on our list is Morgan Stanley, ticker symbol MS. Morgan Stanley is also from the financial sector with a market cap of $137.48 billion and carrying a yield of 3.48%. Year to date, Morgan Stanley has fallen almost 20%. In the last 1 year, it is down almost 9%. From a dividend standpoint, Seeking Alpha shows Morgan Stanley to be raising its dividend for just 1 year, which I don't think is really correct because it has been raising its dividend since last 8 years. So if you look here from 2014 onwards, it has been raising its dividends every year. 2018 it's 30 cents, 2019 it's 35 cents. Then we have it in, looks like probably because of this sequence between 2020 and 2021 is where I think Seeking Alpha is considering it as just 1 year. There's a 5-year growth rate of 28.5%, which is really amazing. The payout ratio is just below 35%. Tracker Dividends gives Morgan Stanley a dividend score of 75 and considers it undervalued by more than 11%. But as for my calculations, I found Morgan Stanley to be undervalued by 30% with a fair price of $105. So these are the list of 5 stocks which we just discussed. To summarize, they are Air Products and Chemicals, UGI Corp, JP Morgan, T. Rowe Price, and Morgan Stanley. Among all of these, only UGI has given a positive performance in the last 1 month. The rest of them, as we can see, have fallen anywhere between 5 to 15%. All of these stocks are really good ones in their industries and offer a very good bargain prices right now. Hope you like this video. I would really appreciate if you could hit down on the like and subscribe buttons and help grow this young channel. And please mention in the comment section what stocks are you looking for in this bargain sale season. Let's discuss more and keep this community moving. Until we meet in our next video, let's try as much as possible to be financially healthy. See ya. Bye.